All right, guys, back to work. Tuesday's behind us. Hope you guys had a fantastic day out there. But it's about that time of day again. Time to get back to work. Wednesday is not going to trade itself. It's Tuesday evening. It's the fourth day of January 2022. A very happy New Year, if I haven't said so already. And, of course, welcome back to our nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades, setting up for Wednesday's trading session. I got a great video in store for you guys tonight. Charts are already in the background, as you can see. Got the S&P here, Nasdaq's here. Oh, you know the oil is always here, and glad to see you're here right along with me. Got a bunch of good trades setting up for Wednesday's trading session. You can definitely tell these markets are range bound right now, right? Got a big range on the S&P, got a nice bearish range on the Nasdaq, and got a big range on the oil. Got a lot of great trades setting up for tomorrow. Oil looks great for what I call a slingshot breakout. We'll talk about how to trade a slingshot breakout on the oil. Nasdaq looks like it's poised for a retest of the low, but I'll tell you right now, if there's one market ripe for a reversal tomorrow, it is the Nasdaq. So we'll talk more about that as we go deeper into it. And the S&P, of course, S&P big tumble back down. We got some range bound trades, buying low, selling high. Not to worry, I'm going to go over all my favorite trades in tonight's video. Now, speaking of the video, before we jump in and get our hands dirty on these charts tonight, got a lot I want to cover. Make sure you subscribe to our YouTube channel. I publish this newsletter every evening with my best trade ideas for the following day. I don't want you to miss tomorrow night's video, so hit that subscribe button. And while you're at it, hit that like button if you guys enjoy the content here tonight. If you guys have any questions for me, drop those questions in the comment section. Always appreciate you guys tuning in here, especially busy first week of a brand new year. But let's get this party going tonight, right? Time is ticking. Tuesday is over. Wednesday is right around the corner. Make sure you hit that like button here if you're enjoying this video here this week here, and let's get looking at some charts here right now. Lots of ranges on the charts, right? Got a range on the S&P, range on the Nasdaq, range on the oil. Oil looks great for, again, that slingshot breakout. Got a couple things we're looking for here to confirm that slingshot breakout. I also have some really nice reversal setups I'm watching on the oil as well, because I'm not sure if you saw it today, but we had that OPEC report where they increased production over the next quarter. So definitely keep my eyes open for reversal on the oil. I do like the long side right now, but you know me. I'm going to make sure we cover all the bases here tonight. Nasdaq made that big dump back down here, and we do think the Nasdaq's going to want to retest those lows at some point tomorrow, maybe even keep going down towards that 16,000 number. But I'll tell you, like I said earlier, if there's one market here which really could punch, that Nasdaq is definitely one of them. I really would love to see a reversal in the Nasdaq. We'll see if we get it. We'll talk about the setups, how to trade it here in the video tonight. And of course, the S&P is kind of an easy one, right? We're buying low, we're selling high. There is potential. We get that open loop here for a reversal in S&P as well. So I wouldn't be afraid of trading this thing ripping back higher here tomorrow. And we'll talk about kind of the way to set it up and how to trade it here safely and profitably. Now, speaking of tomorrow is a Wednesday. We're going to jump into all these charts here in a second. Before we jump into the charts, though, here, let's just make sure we're all on the same page for tomorrow. There, excuse me, there really isn't much as far as major news goes. We've got the oil report tomorrow, like we do every Wednesday at 10:30 Eastern Time. What you want to remember if you're trading oil like we do in our trade room, what you want to remember is give that news event about 10 minutes of a buffer, right? So we're stopped trading oil at 10:20. 10:30 is the news. By 10:40, 10:45, the dust will have settled and you'll be able to get back on the horse and start trading again. So that's really kind of the biggest news that will affect us tomorrow morning. Tomorrow afternoon, we get the FOMC meeting minutes. Now, they've made it pretty clear about their tapering and inflation and jobs. You know, we've heard a lot from the Fed over the past few months. So we don't expect to have anything surprising us tomorrow. But I'll tell you, if you're at your desk tomorrow around 2 o'clock Eastern Time, definitely keep an eye on the reaction to those FOMC meeting minutes. We oftentimes do get a nice trade around 2:30 Eastern time in the afternoons, and we have those FOMC meeting minutes. So those are pretty much the two big news events of the morning tomorrow. I wouldn't worry too much with the ADP employment report or the PMI composite number. The two big news reports tomorrow morning are the petroleum status report. Again, give it that 10-minute buffer if you're trading oil. And then pretty much all of these markets, the S&P and the Nasdaq obviously are the most attracted to the FOMC meeting minutes. Think about 2:15 to 2:30 tomorrow afternoon. You definitely want to be keeping an eye on those charts. Now, of course, don't forget, we're going to be in the trade room tomorrow every morning, Monday through Friday. We open up at 8 o'clock Eastern time. I'll put all the membership details, all the links you guys need to get registered and come join me and trade this stuff with me tomorrow. I'll put that on the website below this video, or I'll put the link in the description of the YouTube channel here today. So definitely grab that link, get registered. I'll see you tomorrow morning. Again, no real major news until about 10:30 Eastern time tomorrow, and then we'll definitely want to stick around for that FOMC minutes at 2 p.m. Eastern time. We get some more big news, though, coming on Thursday, right? Got some more big news on Thursday. And again, don't forget, the big granddaddy of the news this week is an employment number on Friday morning. So make sure you come back, stay tuned for more this week. Come back and join me tomorrow night. We'll talk about how to trade that news on Thursday's trading session. Let's get back to our charts, though. S&P's here, Nasdaq's here. Oh, the crude oil is here as well. All of these markets really have a lot of great trades setting up for tomorrow. Why don't we grab the S&P to get started? The S&P, kind of just as we had anticipated last night, we're trading up around these all-time highs. And if you watched last night's newsletter, you were ready for that reversal coming off of the high, right? We went up, the buyers once, the buyers twice. And just like I talked about last night, right, that hidden channel, that trap high, it really doesn't get much better than that. So if you watched last night's video, you were definitely ready for this collapse. This should not have surprised you, this collapse going lower here after that 10 o'clock news here this morning. Right, the bears, of course, run this sucker lower, right? Very strong move down. Anytime in a trending market, we see a strong move in one direction. We call those open loops, right? What did they do? They pulled back and they retested that low. The sellers, of course, couldn't get much more out of it, right? The buyers get a huge rip off of that low. That is a very, very big clue here, and it's one of the biggest reasons why the buyers may have a shot for a reversal going higher here, because again, anytime we see a strong move in one direction, we do anticipate basically another leg in the same direction. So buyers definitely have the potential to take this thing higher here or to take control of this market. But really right now, what it looks like is the looks of the market is kind of settled into a trading range here. We got some lower highs, we got some higher lows, we got a ton. You notice that range from yesterday, pretty much one big range just kind of stacked right in the middle of this chart. So really what I'm looking to do right now is kind of trade the rotation here on the S&P, right? I really don't want to mess around with the middle of this trading range. What I'd like to do is get it down, buy it back up, right? If it continues to roll lower, we can look at some breakouts going lower. If the market moves higher, this is where things get interesting, because the strength of that recent move says, gotta be careful trying to sell this thing as it goes higher. This could easily just rip right back up to retest those highs here. So we'll talk about kind of how to buy this thing as it goes higher here. At the same time too, how to sell it as we go back down. So really at this point, want to stay out of the middle. We want to wait for this market to make a move lower, right? Back up, or continuation lower, right? Or we want to see it go up so we can either sell it back down again, right? Or buy that breakout going higher. Again, the biggest clue I think right now is going to be this range magnet. And of course, right? And of course, you've got that open loop on the chart going higher here. What if we go lower, right? How do we trade this as we go lower? We're traders, right? So I'm not really in the prediction business. I'm in the let's see what we get and trade what we get business, right? That's the way you want to think about it here for tomorrow. Again, think about these rising support trend lines. If I zoom back out, you can see a bunch of ranges right there. So think about those, ranges are magnets, right? So ranges are magnets. If we go lower, right? If we go lower, I want to buy it back up, originally here, right? So as we go lower, how do we buy it back up? If that range is a magnet, what's the best way to get long on this? Well, there's always two questions I'm always asking in our daily trade room, which opens up at 8 o'clock every morning. I'm always asking two questions. How's my location and how is my momentum? Those are two important questions you want to think about. So as we go lower, how's my location down there? Yeah, great location to be a buyer because, again, the range is above us, levels of support below us. Great to be a buyer there. But how is my momentum, though? Yeah, momentum is still pretty bearish here, right? So what you want to do in this situation is you want to use the same technique we talked about to short off the highs in last night's video. You want to use that same technique to buy off the lows here. And ultimately what you want to do is you want to use that two-try rule. So as we come down, wait for those bears to try a couple times, right? Try once, try twice. Again, as I mentioned last night on the newsletter, right? I like to draw those kind of hidden channels and buy off those channels, right? I also like to use the trap entries, right? For that trap off that low. Again, we pretty much got both of them on that short off the high here. Again, if you watched last night's video, you know what I'm talking about, right? So as we make that move down, the bears have all the control. So give them a chance to try twice. Once they try twice now, all their exits, all their stop losses are right above that high, right? That magnet in the middle is going to want to drag this thing back up into that trading range, right? Maybe it's a trend line entry, maybe it's a trap entry, but that's exactly where I'm looking for, right, the chance to buy off of that low. And then don't forget, once we get that run going higher, now we can go out, we can find a new channel, and we can trade the rotation, right? We can trade the turn. And as I mentioned last night on the newsletter, that first test is always the best test, right? So as we go lower, think about a two-try failure pattern. And then my two favorite entry patterns off the low of this channel are going to be bear traps and seller failures. Failures oftentimes, of course, turn into pullback combinations. We'll talk more about that as we go deeper into this video. So that's one way I want to buy this thing as we go lower. How would I sell it as we go lower? Well, before we do that, you got to make sure you know where you're going, right? There's a big old zone down there, 47.50. That's the major low, right? So we have to assume that 47 half down there, we have to assume that's kind of where the market wants to go. That's important, right? Because if we do see the strong move down, if the bears can hold the pullback and go. Now remember, we saw a strong move down earlier, right? Strong move down. The bears didn't quite give us enough proof there for that to be a full-blown breakout, right? Remember, it's not enough to see a strong move going lower. We have to get those bears to hold the pullback and then jump off that moving average. Once they do, that becomes a 1, 2, 3 breakout. We can now mark up that low. We can mark up that high. And one of my favorite trades off the high of this channel is a trap setup, right? So find that low, mark up that high, grab a prior swing, get that bull trap set up as we call it, right? Bull trap. Buyers get above the moving average. They fail. That's a failure pattern. We go back below the moving average into a pullback, right? Combination. Trap setup, failure setup, pullback combination. I'll tell you, we see a lot of these kind of 1, 2, 3 moves. And then again, it's all about that first test, right? That first pullback off the high of that trading channel. Maybe it's a trap, maybe it's a failure, maybe it's a pullback. Now, I'm not going to go into a lot more or smaller details of all the entry setups we'll use to actually trigger these entries. This video will be long enough as it is. But if you want to learn all the rules, right? I have a checklist included with our quick start class. I'll put a little link up there for you in the upper right-hand corner. If you are serious about your trading, if your goal, like me, is to earn daily income in these markets, I have a great roadmap for you to follow, our 3-step strategy. You'll learn all the details along with all the entry patterns in that free quick start class on our website. Grab that little link that popped up there in the upper right-hand corner. You're gonna love that quick start course. Now, another way to sell this market, if we do go lower, if the market rolls lower here and starts to grind, right? Grind. Just simply draw that trend line down off that low, bring it right up around that high, and that's exactly now where you can start to think about that same sequence, right? So we pop up into a trap, we get that failure, that pullback, right? And again, you'll learn more about the entry techniques, right, as we go into that quick start class, right? So if we do see it kind of pop and start to grind down, oftentimes that first short off the high is where the money is, right? So we definitely want to be keeping an eye on that if we do get this market running lower here. So some ideas to sell it short on the way down, and of course my game plan will be to buy off that low using that range as a magnet. As the market tries to go higher, this is where things get a little more interesting because again, you've got that open loop move, right? The buyers want to retest this high. So as we go higher here and try to retest the high here right now can I sell this? I can definitely sell it, but remember it's all about, right? It's all about momentum, right? Location's great, but is this going to be a bull market or a bear market at that point? It's going to be a very bullish market, right, when they retest the high. So once again, without sounding like a broken record here, you want to think about the same basic idea. Use the 2-try rule to rope in these buyers. Let them try once, let them try twice. Again, I like to find those little hidden channels, right, for that short off the high. And then if we can get it, we'll grab that channel, bring it on over, grab that trap, grab that failure pattern, right? We want that first test right off of that high. So very, very similar plan of attack here. I just want to make sure we get up around those highs though, right? Try to get back up and retest 1, 2, right? And then again, short back down, find that new channel, and don't miss that first test as we try to make that run back down to retest those lows, right? Remember, it's all about momentum, right? At that point, right? Try to rope in those buyers, use the 2-try failure pattern, and sell it back down again. Now, the key right now is we don't really want to do anything inside this middle. You know, whenever we have back-to-back ranges like this, you can see today's range, yesterday's range, day before that, right? So you really want to try to focus on buying low and selling high, basically fading breakouts in these types of environments. Now, what would a breakout look like? Well, this could definitely turn into a 1, 2, 3 breakout. You know, at kind of the very most, at the most extreme here, if this market was to really start to race higher here, I can definitely go out, mark up a new channel, mark up the low of that channel, try to get underneath the moving average. One of my favorite trades is whenever I see a reversal, 1, 2, 3 reversal. Remember, it's all about how we jump off of that moving average here and then get just underneath the moving average. If we can get just underneath that moving average, this will be a strong move, big bullseye back at that high, trap in those bears, right, around the low of that channel and hit them right where it counts. A failure pattern into a pullback combination and again, a retest of that high, right? Think about what's going to happen on this one, right? Market rips higher. We get back underneath the moving average. And again, you'll learn about all the indicators, how to find the levels of support and resistance. You'll learn that stuff in that free quick start class. So think about now, we get below the moving average. The bears are thinking we're going to go back into that range here. But remember, you've got all of that momentum right now. So just let those bears get trapped, right? Use their stops as fuel with our failure pattern, and then grab that first pullback as we go back above the moving average. The objective is to back up to retest the high. Another thing you want to think about on this is the size of that leg, right? Remember, the breakout leg is the measuring leg. So as we go higher here, the size of that leg, and again, I'm just simply kind of illustrating this on the chart right now. I don't know how big it's going to be here off the top of my head tomorrow, right? But the size of that leg, the size of that 1, 2, 3 breakout leg is going to be the same size of our next target going higher, right? Again, I don't know what it's going to be yet, right? But that's one way I can buy this. Another way I can buy this would be if we see these, basically a smaller 1, 2, 3 breakout, right? Let's say, for example, we go back up to retest the high. Let's say the buyers come back in and rip it higher here. This is more realistic, right? This is more realistic. I mean, don't get me wrong. I would love to get this big, beautiful, channel pullback here, but I wouldn't hold your breath for that, right? What is more likely, likely being a relative term, right? What's more likely is to get this market going lower and then back up again, right? That's what's more likely. But if we do get this run up, if they can hold that pullback and jump off the moving average, don't worry about the bigger channel here. Find that smaller channel, right? The smaller channel is the one that's usually going to give you the better results here. Find that new channel. Think about those prior swings. Get underneath those prior swings. That's where the easy money is. Trap pattern, failure pattern, right? Pullback combination, right? Plenty of examples. Again, I probably have 100 or so examples of that combination inside that quick start class that I mentioned earlier. So that's a couple of ways I want to buy this thing, right? As the market goes higher here. What we're really going to have a hard time with is if the market simply does one of these, right? Where it goes up like this and kind of struggles up here. You can see there's a lot of little false tops up there. So just be careful with that. You really got to see it really punch. It's really got to punch and really get some nice strong momentum going right on through those highs, and then we can go out and we get serious about finding the channel, right, and grabbing that first test, because again, the first test is always the best test. And again, remember, the size of that breakout leg, that will determine where that next objective is going to be. Now, I could cover a lot more scenarios on this, but I'm running late on time here right now. So let's keep going, and I'll fill in any blanks tomorrow morning in our trade room. Don't forget, the good stuff is tomorrow morning in the daily trade room. Over to the Nasdaq here on the NQ. What's going on in the NQ? Yeah, who could have ever seen this collapse coming? Yeah, absolutely, right? We saw this coming a mile away last night. Market, of course, wasn't as easy as the S&P to catch that reversal, right? The S&P give you that nice 1-2 trap and back down. This is just nothing more than a 1-2 reversal, right? 1-2 reversal, right? You're marking up that low, you're marking up that high, and again, you're grabbing that first test, right? Is the best test. So again, if you followed last night's video, you were pretty prepared for that here today. Strong move down for the bears, right? Strong move down for the bears. Probably goes down right to a measured move here. And then, of course, we go into a trading range. Okay, that trading range is a magnet. And so we basically have a bear market here into a range, right? It's basically a bear market into a trading range. Now, I mentioned in the introduction that if there's one market right now that really has potential for a reversal, this is definitely it. The S&P has something similar, but I'll tell you though, oftentimes we'll see these things kind of slingshot off that low, and then that high right there. Notice how that high and this channel line up really nicely. So I'll tell you, we're very bearish right now, but remember, anytime we see a strong move in one direction, it opens up the door, right, for that, what would ultimately be a 1, 2, 3 reversal going higher here. Now, we're a little bit too bearish overall, right, to be buying this market right now, but if we can get this proof of this reversal, I'll tell you, there's a lot of open space up there for a run back up to those highs here for tomorrow. Now, obviously, right, again, we're not in the prediction business, right? We are in the trade what we see business, which means if we see that reversal, we'll trade it. I'm not going to try to predict the reversal, not in a big bear move down like that today with a range down below us. Ultimately very similar to the S&P, right? If we go back up and retest the high, we'll try to use that to try reversal back down again. If they hold that pullback and run, we then open the door for a new channel. And there's a couple more options as we go higher here on the Nasdaq. We'll talk about that here in a moment, right? As we go lower here, if we go lower here, I would love to get, right, one of those 2 try failures. I would love to get either maybe a trap, right, as we're going lower. You have to think right now there's a big bullseye right on that low, and then the next one would be down at that pendulum swing. So sellers would love to sell this thing as we go back lower. The buyers can definitely then look for exhaustion to buy it back up, or they can simply wait for the continuation and sell that break down. 16,000 looks like a pretty good juicy round number there for those sellers if they can get it. So what if we go up? What if we go down? What if we go sideways? Let's make the plan, right? So if we go higher here right now, again, I think the buyers have a great opportunity at this low right now, but I'm not really interested in trading that. I'm not really interested in trading that long side. We're just not quite there yet, right? Remember, it doesn't matter how strong the bounce is. What matters is can they hold that bounce? That's the key. Can they hold it with that 1, 2, 3 move? Okay, here's a couple of ways. One way to sell it, right? If we can get, let's say for example, right, as we pull back here, buyers trying once, buyers trying twice, find that hidden channel, mark up that high, right? Great spot there for a short as we go back down again. Trap, channel test. Bottom line is 1 try, 2 try for the buyers. Why 1 try, 2 try for the buyers? Because of the strength of that move, right? That's why. You want to give the buyers that benefit of the doubt, especially since they're right there around that channel there. So give them a couple shots to get long on this, right? And then short right down. Again, all their stops will be sitting right there. Big bullseye right down at that low. Let them wrap that, let them dig their own grave on this. Let them try a couple times, right? And get that short going back down again. If we do just start to roll lower, right? If the market does start to roll lower, think about traps. Traps are definitely going to be your bread and butter if the market doesn't give us a short up around this area. Obviously, we'll be looking for additional levels of resistance. You can mark off that low, mark off that high. That's a great looking short right there. You can see it also, of course, incorporates the 2 try rule, right? Buyers once, buyers twice, and that short off of the high here. Those are a couple of ways I can sell this market as it goes lower, right? So whether we get the 2 try rule for the failure back down or the market begins to kind of rotate down without us there, there will definitely be some spots there for that short back down to retest the low. Can I buy it down here once we get there? Right? If we get down to these lows, can I buy it down there? I think the most important thing you want to keep in mind if we do get down to those lows here is to make sure there's no resistance trend lines in your way. So keep an eye out for those trend lines coming down overhead. Oftentimes you'll get some trend lines coming down. You got to be careful buying into them. Now, at that point though, if we do get down to take out that low, if we do get down that support trend line, that range of course continues to act like a magnet here at that point. How do I buy it though? Well, remember, it's all about location and it's all about momentum, right? So if I end up all the way down at those lows, okay, maybe we get lucky, there's a couple shorts going down to those lows here. At that point, location's great, but momentum is the problem. So just like on the S&P, buying off that low, right? Let the bears try a couple times, okay? Grab that trap entry, below that low, find that hidden channel off the high, off that low, right? We're trying to buy, right, off of, again, buy into those stop losses, right? We let the bears try a couple times. Their exits are right above that high. Once we see a nice juicy signal candle, and you'll learn all about signal candles and what to look for in that quick start class linked up in the upper right hand corner. That'll be a great way to use the 2 try rule to rope in those bears, right, and look for that long going back higher. And then don't forget, at that point now what I can do is I can mark up the amount below, I can mark up the amount above, and I'm going to try to find a way in on that first pullback before we get there, right? And I'm not worried about the momentum at that point, right? If the bears try a couple times, if they fail, then again, measure the amount below the range, project that back above the range. That's going to give you kind of an idea of where the market wants to go. And your job at that point, our job tomorrow in the trade room will be find that new channel and then grab that first pullback. And again, as I've illustrated before on this video, my two favorites, or I guess 3, would be the trap, the failure, right, and that pullback combination. as we go higher here. The market could really push too, right? You get that pendulum swing down here. If we do end up rolling lower here, right? If we do end up really rolling down here, you can also apply that same thing down here, right? We take out that low, 1, 2. One thing you want to remember is the bigger the move, the bigger the two try, right? The bigger the move, the bigger the two try. So for example, right? Big move down, right? You are playing with fire if you try to use a very small 1 try, 2 try, right? So big move down today, you want to think bigger 2 try, right? 1, 2. Okay, so if it really ends up collapsing back down here, that'll be a very big move. You want to see, you don't want to see 1, 2 and then back up. You want it to be, right? You want to see that 1 get up, right? 2 get right, try again. Really get that very large 2 try. And again, the size of that move down will let the size move back up here, find that new channel and grab that first test off the low there, right? We're buying that failure. We're buying that first test with a seller failure, right? A bear trap, a bullish pullback pattern, and trying to get that run back up into that trading range. How do we sell it back down here though? Right? How would I sell this? So the hardest part about this, if we don't get the short, right, off the high, or if we don't get that short on the way down to those lows, the hard part is going to be selling down here. What we're going to want to see is we're going to want to see them take out that low, and like always, we're going to want to see proof they can hold that pullback and really blast. What you always want to kind of remember is a broken pendulum is a broken range. So we really got to get that push going through that pendulum before we can really start to sell more if we find ourselves down in this area. There may be some definite bear traps down there if we end up at that low and we try to sell right into that low, right? So just be careful with that here tomorrow, right? Like for example, we may see something like this where it moves lower, it pulls back, it runs lower here, and this is where you might get into trouble tomorrow trying to sell that 1, 2, 3 breakout pattern off the high of that channel, right? We're not quite in a good spot for it. Now, if they can hold that pullback and blast from there, now we're talking, right? Now we're talking. Now we can start thinking about those shorts off the top of that channel. We'll have to watch that more closely tomorrow once we get there in the trade. Just be careful. Just be careful selling that thing right down around these range lows. Because again, that pendulum swing, it'll sneak right up on you. You'll be thinking, oh, perfect. We're nice and bearish. I'll get short. Just be careful, though, with that pendulum swing. You get that pendulum swing, the trend line down to that low down there. Just be careful with the shorts at that low here. How do we buy this thing as we go higher? Again, as I mentioned earlier, I'm not trying to buy this one, but if I can get a 1, 2, 3 reversal here, absolutely. I would love to get this thing to take off to the upside. We have all that wide open space above us. I can mark up that high. I can mark up that low. You know me. I love to grab those traps underneath those prior swings, those seller failures, those pullback combinations. Again, you'll see a lot of examples of that in that free trading course on our website. Trap setup, failure setup, pullback setup. And then again, don't forget the breakout leg, right, is the measuring leg. In this situation, what I'll probably do is I'll use this leg right there as the projection leg up there. But what happens a lot of times it'll be like a one leg, it'll be a modest second leg, and that third leg is symmetrical, right? So that leg and that leg are equal. You know, again, I'm kind of out of space here to project that, right? But think about that being the next objective. It's pretty simple if you think about it, though. Where does the market want to go? If it reverses here, they're going to want to go right back up to those highs here. And again, there's a lot of potential that may happen because there's a big range right there, right? So this really, again, the buyers have a great shot here on this Nasdaq, a little more than the S&P in my opinion. We'll see what happens though, right? Now, don't forget, we may also go like this, right? We may also jump up, little 2 try breakout, strong move higher, shallow pullback, higher high in price. That's an easy trade to get into, right? So on this particular one, if we see, remember these three rules, right? Strong move, shallow pullback, higher high in price, traps, baby. One of my favorite trades right now is that two-try trap. Now, can I grab a channel and find that channel? If I can, even better. Not required. I'll be very honest, not required. If we get a real strong pop, shallow pullback, higher high in price, that will definitely work. I would also say, too, if the market was to pop and start to grind going higher here, same idea, right? Mark up the highs, bring it down off that low. If the market starts to run and kind of grind higher, don't waste your time looking for that big channel, right? I mean, don't get me wrong. I would love to get that deep pullback. That would be fantastic. But usually when the market begins to grind like that, your best option is to draw the trend line off that high, right off those highs. And then, of course, once you draw that up, that'll give you that steeper channel. And remember, if the market grinds like that, that's a short squeeze, right? That'll be a short covering rally, that trap, that failure, that pullback combo as we go. Those will be some easy trades for the buyers here, right, as we go higher here. So there's no shortage of ways to get long on this, but we've got to see some proof, though, at that point, right? What you got to be careful with is if the market, again, let's say it pulls back here, holds that low and goes up and double tops it. You got to be careful with that one, right? That's the one you want to think about, the 1, the 2, back down again. If it keeps going through that high, then perfect, right? Now we find that channel, right? We look for our two-try, right, trap entry. And again, remember, I'm just simply kind of scribbling in the charts right now. You're going to see all the rules. You'll get my checklist that I use, right, as part of that free course linked up in the upper right-hand corner. Now, I'm sure there is something I missed in the chart tonight. Unfortunately, I can't anticipate everything. Tomorrow, though, in the trade room, you better be there. We'll put the pieces together tomorrow morning once we have some more information here. How about some crude oil? Wrapping things up here on the oil tonight. And by the way, if you're still watching this video right now, I hope you hit that like button for me. Hit that subscribe. Make sure you subscribe to our YouTube channel. And, make sure at this point, if you've done so already, make sure you send a copy of this video to a trading friend of yours. Everybody can benefit from this knowledge. So what's happening on the oil right now? Oil, of course, you can see is very bullish. Right? Oil's bullish. Now, we did have an OPEC report today, as I mentioned last night on the video. And in that OPEC report, they talked about, as expected, basically increasing production in the next few months. So we may see a reversal on this. And I've got a pretty good plan of attack here for a reversal. But right now, the basic idea of this, it's a very strong, relatively strong move up into a trading range. The buyers, you can see here, have done a pretty good job at getting that support level below the range, right? Remember, we always say, right, if we have a bull market into a range, the range is the magnet. What do? You find levels of support. You find levels of support like a trend line or a swing line, right? And you buy off those areas of support. We don't just buy the areas of support. We use a failure pattern. We wait for the pullback. We wait for the bears to get short. We don't try to pick a bottom on that stuff, right? That's a rookie's game because a lot of times you'll pick that bottom, and you'll get stopped out by a couple ticks, right? Your stop goes right down below that low, and it's coming down, stopping you out, and then goes without you. It's so much easier to avoid that loss by not trying to pick that bottom. Just simply wait for those bears to fail and buy it right back up, right into that trading range. Yeah, you're not going to make as much money on the winner, but the odds of success are so much higher than trying to pick those tops and bottoms, right? So anyways, long story short, we get a bull market into a trading range, right? The buyers gobble this thing up here, and now they're trying to punch this thing right up around these highs to basically complete that pendulum swing. Right? Now, this is where we have potentially a slingshot breakout, right? We got that potential kind of slingshot breakout, right? We go below the trading range, and now if we can push higher here, what happens a lot in these kind of slingshot breakouts, again, we have an open loop there, right? Anytime we see a strong move in one direction, we anticipate another leg in the same direction. what I would keep on your radar for tomorrow is watch this area right here and think about how the market may really jump, right? Push right through that pendulum swing and then come right on back here for us, trapping some of those bears and hold the top of that trading range, right? Kind of a slingshot breakout or a breakout pullback off the top of that range. What you're going to want to see on this as the market goes higher is you're going to want to see them just torch right through that pendulum swing, right? They're going to break right on through that pendulum swing because, after all, broken pendulum, broken range. So if we can push up to 78 and change up there, I really like this pendulum. I really like that breakout pullback, or as I call it, a slingshot reversal here, right? So imagine now we end up blasting higher. We're going to mark up that high. The moving average will almost always come up quickly. We'll get below the moving average, get those bears to come in and try to get short going back in. Remember, all of that momentum, we're very bullish at that point. And of course, once those bears commit, you know exactly where their stops are. Grab that failure pattern, grab that pullback combination, and we're off to the races. Seller failure, pullback combo, and then remember the size of the breakout leg, right? That leg size right there is the measuring leg going higher. Now, as I mentioned last night on the video, there is a lot of open space above us. Look at all this blue sky overhead. 80.35 all the way up to 82.35. There's a big old range up there, just above the 80 level there. So there's a lot of open space, and that's got to excite these buyers. The big thing right now is we just don't want to do much right in the middle here, right? That's kind of the one thing about ranges. You don't want to get caught in the middle. We got that major top over there. So, really a couple easy ways to get long on this. One would be that breakout pullback, like I mentioned earlier, right? Can I get that, breakout pullback, get through that pendulum swing, come back below the moving average, right? Hold that high, use that failure into pullback combination, failure, pullback combo, target back to retest the high, and there's your measured move target going higher here. Or we may not get that breakout pullback. The market may just simply pop up. It may hold that pullback to the moving average and jump off the EMA. We call those 1, 2, 3 breakouts, right? 1, 2, 3 breakout moves. Mark up that high, mark up that low, drill down to your faster time frame. This is a 2000 tick chart. We'll trade a much faster time frame in the trade room. And then again, we'll take the first test off the low of that new channel. Is it a trap entry? Is it a seller failure entry? Is it a pullback combination? We've talked a lot about those already. I'm not going to bore you guys with the same thing over and over again, but you know the idea, right? Get through that pendulum swing, break away from that moving average, grab that channel, and go. I also wouldn't be afraid of a 2-try breakout. Strong move up, shallow pullback, right? Barely touches the moving average. Higher high in price. Traps, baby. Again, one of my favorite trades over the past 6-8 months is that 2-try trap, right? Get that really strong move. Now, remember, there's a big difference between that setup and this move right here, right? See those lower lows, right? Remember, beware of the lower highs, You got to get that strong move, that shallow pullback, and that higher high, okay? That's why we want to see the higher high. It's not enough just to get a strong move up, shallow pullback. That lower high now, right? It's just not the same setup, right? And this course goes into a range here. Okay, so watch that 2-try breakout as we go higher, and again, keep a close eye on that leg because that will be the measuring leg as we go here. I really don't like the short off the high here. A little bit too bullish right now and way too much open space overhead here. If the market really blasts going higher, we're going to take a look at, right, buying that first pullback. How about the short going lower? You could definitely see there's going to be a range down there. You could definitely see this potential, this market easily reverse. We're sitting right at that major top, right? Again, the OPEC meeting says they're going to pump more crude oil. This could easily go lower. Now, is it a bear market right now? No, it's not. Location's great for a short, but momentum isn't that great for a short. So here's a couple things I'm thinking about for tomorrow. One would be, think of this as a big 2 try. Remember how I said earlier, the bigger the move, the stronger the move, the bigger the 2 try needs to be? Well, imagine now we make a run lower, okay? We go lower. At that point now, these buyers should be pushing this thing. So if we go lower here now, what can I do? I can mark up a new channel. I can draw off that low. I can draw off that high. I can also draw a trend line off that high as well. And it kind of creates this little, little resistance area there. You know what I mean? Again, it's a combination of the trend line coming down, okay, along with what I think is the more reliable level is to find that low, bring it up around that high, and then get that short coming back down. Now, one thing about a wide channel like this, when it comes to wide channels like this, you got to be careful with traps. I love traps. I do. I love traps. But let's say, for example, that channel looks like this, right? If we end up all the way back up to that high, that trap is not going to be very reliable, right? If this is a really narrow channel, then there isn't a lot of momentum for the bulls. So traps are great in narrow channels. Okay, so just be careful to trap off the high of that channel. Again, it's just because of the momentum as it pulls back, right? Oftentimes, this thing will just keep on going, right? Just be careful with that. So a better entry on this one would be, let's get above the moving average. Let's see if we can get these buyers to commit going back up. And then once they do, their stops are sit and duck, right? Failure pattern, pullback pattern combination, right? And then back down again. Where's the objective? Yeah, this is pretty easy. Back down to retest that low at 75. We'll call it 75.70, right? So again, it's a buyer failure into a pullback combination. You'll see a lot of examples of those combination setups in the quick start class. All right, guys? So again, that's one way to look at it. Now, the market may just dump. It may tumble, right? So don't be afraid of something like this, right? Where it takes out that low. We see it jump off the moving average now. I'm really not a big fan of buying this right here if we take out that low. And the reason being is because at that point, there'll be a level of resistance coming down. These buyers should be taking this thing higher right now, right? And they'll do whatever they want. But if the buyers can't put this thing higher here right now and give us that slingshot move going higher, if it takes off the downside here, be very careful with that long side. Make them hold it and run it lower. Then, right, see how I draw this one? See how much steeper this channel is, right? Now that, a real steep, nice, tight channel, that's the type of channel that you can get those traps going on, right? Trap, failure, pullback combo. Makes sense, right? So that's one way to do it there. 1, 2, 3 reversal. First test is the best test. Or let's say, for example, right, it just dumps off the high here. Really strong move down. Shallow pullback to the moving average. Lower low in price. Traps, baby. That's the money trade right there, right? So if it really starts to collapse and run lower, strong move, shallow pullback drives the bears crazy. Lower low confirms the move. That trap is an easy money trade. Back down to retest that low. All right, guys? And then once we get down there, we'll see what happens. We may find ourselves all the way down at that low, and because this is basically one big range up here, we may find ourselves tomorrow going 1, 2 try failure, and buying that first test from there. There's no reason why that couldn't be a late session move tomorrow. For example, let's say the news comes out, OPEC, the oil report tomorrow, it dumps us down. We may easily be in store here for 1, 2, get that 2 try failure into that first test and right back up here, right? Because again, there is that big range down there, right? So we'll see what happens tomorrow. But now at least you know kind of what I'm looking for here tomorrow. Again, I hope by now you've grabbed that free quick start class because you'll learn a whole lot more than I can explain in this already very detailed video there. So enjoy the free class on the website. And don't forget, tomorrow morning, every morning, Monday through Friday, we're going to get together in the trade room and we're going to trade this stuff together. Learning this stuff is kind of the easy part. Going out and executing this correctly every day day without forcing trades, without taking revenge trades, right? Or taking trades outside your rule. The mental part of this is the most difficult part. And that's why our trade room is such a great shortcut for you, right? Come in, trade right along with us here, learn it, right? Learn it while you're doing it with me. It's just a fantastic way, right, to learn and earn. Don't forget, I'll put all the important links you guys need in the description of this, right, of this YouTube video. If you have any questions for me, call the office there. I'm always there, and you can always simply drop me a question in the comments section below. Guys, we covered a lot in this video tonight. Hope you enjoyed it. Thanks for sticking around me here tonight. I know I've been a little bit late in these videos here this week as we kind of get back in the rhythm into 2022, but enjoy the evening. We'll see you guys tomorrow, 8 o'clock Eastern time in the trade room. If not, you better come back and see me tomorrow night, and we'll do it all again. Get us ready for Thursday's trading session. Guys and gals, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.